Hello and welcome again. This is Islam Ahmad. I will be your lecturer today. I will leave the risk warning for a minute in the screen. The risk warning state that trading in Forex CFDs and other derivatives is highly speculative and carries a high level of risk. It's possible to lose all your capital. So today we will speak about a very important subject under the technical analysis techniques, which is support and resistance. So support and resistance are two foundational concepts in technical analysis. And understanding what these terms mean and their practical application is essential to correctly reading price charts. And like many concepts in technical analysis, the explanation and the rationale behind technical concepts are relatively easy. It's like common sense. When you hear this for the first time, it will be like very easy to understand, just like any technical analysis concept or techniques. But mastery in their application often takes years of practice. So if you see this as very simple rules or very simple concepts, you will need to practice it more to get the essence of it. So technical analysis use support and resistance level to identify price points on a chart where the probabilities favor a pause or a reversal of a prevailing trend. So support occurs where a downtrend is expected to pause due to a concentration of demand. And resistance occurs where an uptrend is expected to pause temporarily due to concentration of supply. So market psychology plays a major role as traders and investors remember the past and react to changing conditions to anticipate future market movements. So support and resistance areas can be identified on chart using trend lines and moving average. We will do a review of this later in this webinar because there is many ways to paint or see the support and resistance level. But let's start with the very basic concept of any market. Price move because of supply and demand. This is the essential concept of any market movement. The price move because of there is a supply and there is a demand, and the interaction between these two forces that cause the price move. So when demand is greater than supply, the price rise. Okay, there is a lot of demand, a lot of buyers who want the same amount of goods or currency or metal or shares. So the price of this share or metal or currency rise, and vice versa. When the price fall, sometimes price will move sideways as both supply and demand are equal. So when there is a very strong buying force, it will make the prices move up. When there is a lot of supply, a lot of selling, it will force the price to move down. And sometimes the forces of supply and demand are equal. At this time, we see the price move in what we call sideways or a range. So let's start by the support itself. What is support? As you can see in this picture, let me get my laser pointer. So as you can see here, this is support. In a downtrend, prices fall because there is an excess of supply over demand, as just we mentioned. So the lower price go, the more attractive prices become to those waiting on the sideline to buy the share or the metal or the currency. At some level, demand will would have been slowly increasing, will rise to the level where it matches supply. So where is a lot of supply, as we mentioned in the previous slide, the supply is very strong, so the price will move down, down, down. Then when we have a demand, at a point, the supply will not be more than the demand, so the price will stop going down. At this point, price will stop falling, and this is what we call a support. So support can be price level on the chart or a price zone. Okay, so like for example, if it's a share is just, this is a rough example. Okay, a share is selling on $100. We can call this $100 a support level. Whenever the price fall into the $100, it finds support. Sometimes it's not an price, but it's a zone between like 100 and 98. Between this, we call this a zone of support. So on the chart, the price zone at any event support. So is the area of price shows buyers' willingness to buy at this price or level. This means that demand will usually overwhelm supply, causing the price decline to hold and reverse, as we see in this example in the picture. Let's move on to the reverse, to the resistance. The resistance is the opposite of support. So price actually was moving up, okay, because there is more demand than supply. More people are willing to invest or to buy this share or this metal or this commodity. Okay, any price. Okay, you can apply this to any price, even your day-to-day vegetables. If there is a lot of demand, it will rise in prices. So as the prices move higher, there will come a point when selling will overwhelm the desire to buy. This happens for a variety of reasons. It could be that traders have determined that prices are too high or have met their targets, so they will just sell. It could be the unwillingness of buyers to initiate new position at such rich valuation. It's the buyers will not continue to buy because they see prices are going very high. So it could be for any other number of reasons, but a technician will clearly see on a price chart a level at which supply begins to overwhelm demand, as just like the example you see. We call this is a resistance. You can see here. This is what we call a resistance. Like support, it can be a price or a level or a zone between two prices. We call this a zone. So it can be a price like $100 or a zone between like $95 and $100. So now we got grasp of the concept of support and resistance. We know now the basics. So once an area or a zone of support or resistance has been identified, those price levels can serve as a potential entry or exit points, because as the price reaches a point of previous support or resistance, it will do one of two things. Here, what we was just explaining will become practical application. We can use this to trade, because when we see the price moving again, going to a support or a resistance level, there is only one of two chances. It either bounce back away from the support or resistance level. This is the first chance to happen, the first probability to happen, or the second chance, the second probability, it's violate the price level and continue in its prior direction. So until it hits the next support or resistance level. Okay, this is where the support and resistance come into actual application. So the timing of some trades is based on the belief that support and resistance zone will not be broken. We will have more live examples at the end, but just bear with me. So whether the price is halted by or breaks through the support or resistance level, traders can predict the direction of price and can quickly determine if they are correct. So if the price move in the wrong direction, break through the support or a resistance level, the position can be closed at a very small loss. So let's see that you expected that the gold prices will not exceed the resistance level. So you have now positioned a sell trade. So your stop loss should be very, very tight, because this is a high, so it should not be broken. So you will give the price just a little move, breathe. If the price move and broke the resistance, you should go out of the trade, because now this is actually at any strategy or at any concept, at any reason of a trade, because you know there is a reason for any trade. You buy because there is a reason, there is some philosophy, some strategy behind it. When this break, when the market move in the direction that you did not expect, you should be out of this trade. You should have the mentality of acceptance of loss, because this is part of trading. No one is 100% correct all the time. So now you can see my screen. If you have any issue, if you have any question, please feel free to send me on the chat and I will answer all the question at the end. This is an actual price movement in a range between a support and a resistance. You can see here, this is bar chart, not a candlestick chart. We will have some examples with candlestick charts later. So the price, whenever it touch the resistance level, it moved down, as you can see here in my screen. And also whenever it touched the support level, it moves up. Again, we call this a retest. The price go again to the resistance. It failed to break it. So at this moment, if I'm trying to use the support and resistance level as a trading strategy, I'll be selling from this level and I will put my stop loss above this level. It should not break through if my probability or my expectation was right. So let's move on to other concepts and examples. Support and resistance can be found in all charting time periods. This is very important. You can use this in a daily, weekly, and monthly chart, which is long-term chart. You can use it and 1 minute even chart, 1 minute or a 5-minute chart. So the concept is the same, but the longer the time frame, the more significant the support or resistance level will be. So a daily support and resistance is a stronger support and resistance than a 1 minute or a 5-minute support and resistance. To identify these levels, you need to look back at the chart to find a significant pause in a price decline or rise. So you don't just assume that this is a support or resistance. You have to look at the history. If you remember, one of the 3 key principles in this technical analysis is that the history repeats itself. So you should look to historical data and see the price decline from a support and resistance before you call this a support and a resistance. So you look forward and you see whether the price hold and or reverse as it approaches that level. As has been noted above, many experienced traders will pay attention to past support and resistance level and place trade in anticipation of future similar reaction at this level. You are not the only one. You are not the only one who is seeing these levels. There is a lot of traders who are in the same chart, seeing the same levels and willing to use this support and resistance level. Actually, the support and resistance level is one of the most common used trading strategies between very, very experienced traders and very strong banks and hedge funds trading. So this is just a side note. It's a very important side note, okay? Keep in mind that technical analysis is not an exact science. Sometimes the price will dip below support level or a reverse before it gets to the prior support level. So it means if you draw the line of support or resistance, this is not like a physical line that the price will have to move from. No, sometimes it can break the support and then go up again. So we call this a false break. So the same is true for resistance. Price may reverse before it gets to the prior resistance. Sometimes it even reverses before the level. So you should be flexible with this. Flexibility is required in this chart pattern. This is why support and resistance levels are sometimes referred to as zones. So it's better. This is my personal take, and this is very important. You should make a support and resistance zones, not exact prices. As I mentioned in the example of 100 to 95 support. Don't just use the 100 as a support level. It can break 100, go to 99, 90, even 95, and then go back. So use a zone instead of just a price. So there is nothing magical about this price level, okay? It's simply many market participants are acting off the same information and placing trades at similar levels. This keynote is very important because it can make or break your trading mentality. Some very good traders lose because they think of this technical analysis techniques, because they think of this as technical analysis techniques and information as exact science. If you have any issue with the voice, just please inform me. If you can hear me clearly, please inform me as well. Okay, let's move on. Now, how we draw this support and resistance level, we saw one way of just these lines. There is another way, which is trend lines. So the previous examples show that a constant level prevent an asset or a currency or a share from moving higher or lower. This static barrier is one of the most popular form of support and resistance, but the price of financial assets generally trends upward or downward. So it's not uncommon to see this price barriers change over time. This is why the concept of trending and trend lines are very important when learning about support and resistance. If you can see my screen, please inform me if you have an issue with voice or screen. Okay, looks like everything is working fine. If you can see my screen, this is a trend line. This is the actual price move of a market. It moves making higher highs and higher lows in uptrend and lower highs and lower lows in a downtrend. This line, we draw it. It's not the price that draw this. The price is this black line. But this blue line or red line, we draw it. If it's an uptrend, we draw it between the lows. If it's a downtrend, we draw it between the highs. We connect the highs and we call this a trend line. And then a trend line acts as a support and a resistance level. So now when we have this here and here again, and we draw this line, we predict at this level it will be a support level. And if this level break, this uptrend break, we think that the price will go in the opposite direction, will go in a downtrend. So we draw this line between the highs. It will be lower highs, and now we will know that we are reversed in a downtrend. Okay, this is a very common support and resistance level, which we call trend line, and which we draw by our tools in the trading application, just like MT4 or MT5. So when the market is trending to the upside, resistance levels are formed as a price action slow and start move back toward the trend line. When the price is moving against the prevailing trend, it's called reaction. Reactions can occur for a large variety of reasons, including profit taking. So this is an uptrend, okay, people are buying. When you are buying, you are making profit, you want to take some profit off the table, okay? So you sell. You see the market move in the opposite direction. It's going up, but sometimes it moves in the opposite direction for sometimes, just for this reason, for profit taking and uncertainty for particular issue or sector. So the resulting price action undergoes plateau effect or a slight drop off in the stock price, creating a short-term top. Many traders will pay close attention to the price of a security or a share as it falls toward the further support and the trend line, because historically this has been an area that has prevented the price of the asset from moving substantially lower. So here is actual chart of Apple share. Please tell me if you can see my screen and hear my voice clearly. Okay, what you see now is the actual Apple share from the year 2019 until 2024. So this trend line, as you can see here, prevented the price from this point to move down, and again at this time, and here even in our 24 expectation, we saw the price moving up from this trend line. So this is a very good example of the Apple share trend line, which is obviously uptrend. Okay. So in the other hand, when the market is trending to the downside, traders will watch for a series of declining peaks, lower lows, lower highs, sorry, and will attempt to connect these highs together with the trend lines. When the price approaches the trend line, most traders will watch for the asset to encounter selling pressure. And so to be a valid trend line, the price needs to touch the trend line at least twice. Okay, so or sometimes it's 3 times. I say 2 times is enough, but if you wait 3 times, it will be a confirmation. So sometime with a stranger with the strongest movement, the price will touch the trend line several times over longer time periods. Also, in an uptrend, the trend line is drawn below the price, while in a downtrend, the trend line is drawn above, as we mentioned before. Okay, let's move on. If there's an issue with voice and the screen, please tell me. Looks like everything is now working fine. So let's move on. So when the support and resistance of an identified level, whether discovered with the trend line or through any other method, is deemed to be stronger, the more times the price has historically been unable to move beyond this support or resistance. So many technical traders will use their identified support and resistance level to choose strategic entry and exit points, because these areas often represent the prices that are the most influential to an asset direction. So most traders are confident at these levels in the underlying value of the asset, so the volume generally increase more than usual, making it much more difficult for traders to continue driving the price higher or lower. So now there is the round numbers, which is another common characteristic of support and resistance. It's if the asset price may have difficult time moving beyond round numbers, such as like $50 or 100 per share. Many people think in terms of round numbers. Yeah, think of yourself. You, me, you, everybody will think about round number. You wouldn't think of like 97. You would use something like 100. So this carries over into the stock market and the financial markets in general, because people have easier time visualizing in round numbers. Many traders tend to buy or sell assets when the price is at a round number. Also, many target prices or stop orders set by either retail investors or large investment bank are placed at round price level rather than price such as like $50.06. Because so many orders are placed at this same level, these round numbers tend to act as strong price barriers. For example, if all clients of an investment bank put sell order as suggested target of $55, it would take an extreme number of purchases to absorb these sales, and therefore a level of resistance would have been created. You should take this round numbers thing with like a pinch of salt, because sometimes works, sometimes it doesn't. Me myself, I don't like it so much, but I know that when price of a share or a currency is an round number, that everybody is watching this number. So just consider it when you see it in any chart. We have also the moving average, which is most technical traders incorporate the power of various technical indicators such as moving average to aid in predicting future short-term movement. In fact, people who find it difficult to draw trend lines, you saw the trend lines and you saw that we draw it ourselves. Some people find it difficult to do so. So they use the trend line with the moving average. As you can see from the chart below, this chart here, this is a moving average, okay? So moving average is a changing line. It smooths out past price data, allowing for an easier identification of a support and resistance. Notice how the price of the asset in the chart below finds support and above the moving average find support and below find a resistance when it hit it again. See here, support, support, support. Now when it's broken, it's a resistance level. So the price when revisiting it again, it make it a resistance level. So when you use a moving average, use it as a support and resistance according to the trend prevailing. So we have, of course, the trading range, which is very similar to the first concept. We saw the support and resistance level. You see a price bouncing in a range between a clear resistance level and a clear support level. Whenever it touch the price, you can even draw a line, so horizontal line. So it's like here, you can see this is a line, the price 1, 2, 3, 4 times failing, and the support level 1, 2, 3 times. I don't need to explain it more. I think it's very clear and self-explanatory. So let's move on to the support and resistance reversal. This is a very important concept, okay? When a support level broke, it become a resistance level. When the price attempt to move back up and couldn't, so it now become a resistance, and vice versa. When a resistance level is broken and the price retested, it become support. So as you can see here in this example, please confirm if you can see my screen and hear my voice and everything is working fine. Yes, okay, let's move on. So here the price was moving down at previous levels, which was here a support level. The price actually broke the support and moved down, so it go back. We call this a test, okay? If the price couldn't break above the support, we now consider the support level, which was a support level, now we consider it a resistance level, and the price will move down from it. So when the price retests this level again, we predict the price will move in the downtrend. So this is what we call support and resistance reversal, that they exchange the roles. Another very important concept when you consider the levels, okay, you draw these levels with your hands or with other tools, so you need some confirmation. A very strong confirmation is the number of touch. The more times the price tests a support or a resistance are, the more significant the level become. When price keep bouncing off a support or resistance level, the more buyers and sellers notes and will base trading decision on this level. Just like this example, you can see here, prices move down to this area. It couldn't break it, so now it's a support. This is a one time. Try it again for the second time. At this point, we now consider this a support level. The third time, this is a very strong level. Everybody in the market saw this, and you can see this in the fourth time. It moved very strong, because now very strong support level is shown to the market participants. So predicting the price move, support and resistance zones are likely to be more significant with the preceded by steep advance for decline. For example, fast steep advance or uptrend will be met with more competition and enthusiasm, and may be halted by more significant resistance level than a slow, steady advance. So this means simply when the price moves slowly to resistance level, many times, most of the time, the reversal will be very slow. If the price moving to resistance in a very strong move, most of the time it will move back, it will bounce back, it will be resisted in a very strong way. This is how market psychology drive technical indicators. So volume at certain price level, this is very important. When you see how much actual trades is being taken as short or long position on the level, this is apply, of course, in the shares or the markets you have access to get the volume. It's not available in the currency market, but if you have this, this is a very strong information. Timing is very important. Support and resistance zones seen in a longer time frame chart, such as weekly or a monthly chart, are more stronger than those in a shorter time frame, just as the 1 minute or a 5-minute chart. Okay, we saw this. We don't need. We already have explained this. Let's get to the bottom line and finish this with some real-time example. Support and resistance level are key concepts used by technical analysis and form the basis of a wide variety of technical analysis tools. The basics of support and resistance consist of support level, which can be thought of as a floor under the price. Okay, think of the price as a tennis ball in a room. Okay, there is a floor. This is the support, and there is a resistance, which is the ceiling above the price or the tennis ball. So price fall and test the support level, which will either hold and the price will reverse to the upside, or be violated and the price will drop through the support and likely continue lower to the next support. So in this example of the tennis ball, broke the ground, it can go now to the lower level of the building. If it broke the ceiling, it will go up to the upper floor. So let's have some real-time example. This is a very strong move of the gold. Let me see your question while I open it. Yes, I know that somebody will ask about gold. Gold is giving us a very good example. Okay, so if you can see the daily chart I'm opening right now, actually gold today and like 5 days ago, every day was making a new high, a historical new high. So a daily chart in gold right now will be broken resistance, everyone. So whenever it's broken, now it should be a support for the next level. So you can see here what we just for ourselves should be. See here, the price was not able to break this, then go down, then went up again. When it broke this level, now is a support level. Okay, so when it's above it, it's now breaking again above, and now this is a support level. We are now at this very moment. Let me open the 1 hour. We are now retesting this. You see, this is a support level. This is actual gold prices we see right now. It was here in the level of 2,655 level, which is the support level. Think of it as a zone from the 2,650 until from 50 until, to the 55. This is a zone. You can use this just to clarify. And another line from this. Now we call this a support area. Okay, what else you can see here? You can see here this resistance. Let me change this to red color to clarify. This is the resistance level, and also another one. See what I'm drawing right now is all-time gold price high. This is history. You see, this level maybe tomorrow can be broken or next week, but today this price have never been shown in any chart before. So this is the strength of support and resistance level. Let's see something. We have gold. Somebody is asking about the euro dollar. Okay, let's open the euro dollar chart and apply our template. Okay, let's make it 30-minute chart, and you will see it's clear. You can see it here. This is a support, this is a resistance, this is a resistance. So now if you are in this area, what should you do? Someone asking. If I'm in your place in this level, I would sell the euro dollar because the resistance is here, is not broken, and I will put my take profit at this levels. This is what I would do in a just a technical approach, because there is of course has to be some fundamental approach. Okay, this is about the euro dollar. So because at this moment we have sideways trend according to the dollar. the dollar someday go up, someday go down, because of course we had the news of rate cut. We are waiting for more rate cuts, and this should push the dollar down. It should push the euro higher against it, but we still are receiving some news, some good news for the dollar. That's why we can see the euro dollar actually moving down, which means we pay less dollar to get 1 euro. So this means the price is moving in favor of the US dollar. But if we are just using technical analysis for this 30 minutes, I would sell from this point and put my stop loss above this level and take profit. I wouldn't be greedy, so waiting for here would be very greedy. I would just take it from here. This would be a very good profit taking. What else? The dollar yen. Yes, let's see it. You can see the dollar was in a very strong downtrend and daily, but after the announcement of the rate cut, actually the dollar becomes stronger. So we now having this issue, which is moving up very strong and then moving down very strong. At this level, I would sell the dollar against the Japanese yen. This is only technical support and resistance approach. Okay, I would put my stop loss here, 145 and 20, and my take profit would be just trailing take profit until I get the stopped out. I would just sell here. If the price moved this way, I would be putting my stop loss at the entry level. Then as the price move on, I will just trail my stop. This is my approach to the dollar yen at this level.